This is Mike Maloney, and Mike is my gold expert. And the reason gold is so important, gold and silver, is because gold and silver is God's money. It's money made by God. And then in 1971, the U.S. government, under President Nixon, took God's money and turned it into man-made money. Never in the history of the world, this is the thing, never in the history of the world has this ever happened. In 1971, the U.S. and Nixon convinced the entire world to replace gold and silver with paper money. This stuff. Cash is trash. So the reason we have so much volatility in the world today is historically, since the time of the Romans and the Greeks and the French and the English and the Germans, every time they have taken God's money, like silver here, and replaced it with man-made money, there's been economic volatility. Now the problem is, so the dollar is going to keep dropping. So one of the reasons I can predict what's going to happen is I can predict the dollar will keep dropping simply because the U.S. government and now the euro, the European central banks, are printing so much of this trash. So you'll see gold going up in price, oil going up in price, real estate going up in price, because this is trash. So that's what happened in 1971, has happened throughout history. And the reason this current election doesn't make any difference is the only person that can put this back in place is a strong, charismatic leader. People like Julius Caesar, Napoleon. That's why they were such great leaders, was they actually replaced this with this. Unfortunately, we do not have that person among the candidates. I know Ron Paul, philosophically, I agree with him as closely as possible, but unfortunately I don't think Ron Paul has the chutzpah, as my Jewish friends would say, to change this whole thing. So there will be more this printed than ever before, which means the dollar keeps coming down and other things keep going up. And that's really what's going to happen. It's predictable. And eventually this will go to its true worth, zero. So all of you savers out there and people trying to save this trash, you're going to lose big time. With that, Mike Maloney.
Kim was talking about the crystal ball, and Kelly was talking about cycles. And the way you make that crystal ball work is just reading economic history, because everything is just waves and cycles and waves and cycles
this has happened
over and over again. It's all happened before. In fact, the thing with the currency has literally happened hundreds of times, where they've gone to from an asset-backed currency. Currencies have been backed by oil, by gold and silver, by land. As soon as you remove something that you can't, something that puts financial constraint on them, where you can't just print as much of it as you want, the currency is pretty much doomed. There's been thousands of fiat currencies, and they all die.
Yeah, back in the Revolutionary War, the U.S. government, to fight the war, printed a thing called the Continental. And that's why the saying is, as worthless as the Continental.
Yeah, not worth a Continental.
Not worth a Continental.
It went to zero in a hyperinflation. Most people don't know that the U.S. has already been through a hyperinflation. And then during the Civil War, Lincoln came out with the greenback, and that's how he paid the troops, and it was competing with a gold-backed currency that was already in circulation. And we went through a huge inflation, where the dollar lost 66% of its purchasing power during the Civil War. So this has all happened before, and we're coming up on a convergence of a whole bunch of cycles. There's something called the Kondratiev wave that's this long, it's about the length of a human lifetime. And the last time the Kondratiev wave went into what's called the Kondratiev winter, that was the Great Depression. We've actually started the Kondratiev winter back in about 2000.
Yeah, let me back up what he's saying. Historically, throughout time, again, it's not crystal ball, it's called prognostication. Every 75 years there's a depression. The last depression was 1930. So we're right on it right now.
Yeah.
Now, again, the rich will get richer and the poor and middle class will get wiped out, unfortunately.
And with that, there's another cycle that I call the currency cycle, and it's this pendulum that swings back and forth from quality money to quantity currency and back to quality money. And it's gone on through the centuries since 407 AD, when the first hyperinflation happened in Athens. And I believe that we're on the precipice of this again. If the U.S. dollar has to go back to gold-backed, you're looking somewhere well north of $6,000 an ounce for gold. Somewhere, and it all depends. You have no idea how much currency they're going to print between now and then.
How much is gold today?
And gold today is $850, $865, something like that. And it just broke its 1980 record high and closed above $850. This is for the first time ever in history. That puts us in the second phase of this bull market. The first phase of any bull market is sort of a stealth phase where it's quiet accumulation. Then the second phase is usually the longest duration and the greatest growth. And then the final third phase is the blow-off top where the market just goes vertical. You remember the NASDAQ in the last 3 months of 1999. It just went vertical, and the public, everybody rushed into it. And they all got slaughtered. The herd always comes rushing in at the end, and they always get slaughtered. And that's the time you want to sell. You don't want to hold on to gold and silver forever. You want to hold on to it until a median-priced single-family home costs less than 40 ounces of gold or less than 500 ounces of silver, and then you want to trade your gold and silver for real estate, cash flow real estate. Like I said, everything is waves and cycles, and the great news is that the greatest wealth is created in the shortest period of time when we're going back through these crises. There was more wealth actually created for the rich, not for the average investor, but for the rich, like Joe Kennedy and Jesse Livermore, these stock market investors. They created more wealth for themselves from 1929 to 1932 than they did all throughout the 20s. You know, World War I and all the roaring 20s, the big stock market boom. They like doubled, tripled, quadrupled their wealth from 1929 to 1922 when the markets were crashing. The same thing happened from 1971 to 80 when the market was going sideways. As a stock market investor, you weren't getting anywhere. There were a couple of real estate booms, but if you take the expansion of the money supply, real estate just kept up with the expansion of the money supply. So inflation really, your real estate in the 80s, 70s, I mean, was keeping up with inflation. But gold went up 24 times its price in 9 years, and silver went up 39 times its price. If you had just 10% of your net worth, your entire net worth in gold, and you lost the other 90%, by 1980 you were 2.4 times richer than you were in 1971 with just 10%. So it's huge wealth that's created in a very short period of time. So for 2008, you know, Robert called me a couple of weeks ago. He asked me where did I see gold going. I said down, and it went way up instead. And the reason I said down was because the European Central Bank had just created 350 billion euros. That's $500 billion worth of euros. They had already inflated their currency supply 12% from January to September. On December 18th, they added another 4% to their currency supply in one day. So the world is awash in paper money. It's a blizzard of paper money. And what's really interesting, if you study history, there comes a time where the public, the mass psyche of the country and the world, this time the world, before it's always been a country, but the mass psyche starts to sense the currency debasement. Everybody should be able to feel it now. You go to the grocery store, you go to the gas station, you can feel that there's a currency debasement going on. Everything's costing more. Your currency is losing purchasing power. And as the public starts to wake up, gold and silver go through the roof, and all that paper that they've created, gold and silver do an accounting periodically throughout history. It's really exciting to see this. They automatically revalue themselves when the public wakes up, and they catch up to all the currency that's been produced. And there's this same tiny little pile of 2 billion ounces of gold that there was back in 1980. And the pile of silver has gone from 2.2 billion ounces to 300 million. Today, there's 8.3 times more gold available for investors to buy than there is silver.
I want you guys to hear what, I don't think we heard what he just said, okay? To me, I've been saying this for a number of years now. Silver is the biggest opportunity I have ever seen, bigger than real estate, bigger than anything else. And silver, as we're talking today, 2008, is about $15 an ounce. Mm-hmm. There's less than 10 years supply worth of silver on planet Earth. The difference between gold and silver is gold is hoarded, silver is consumed. Silver is an industrial precious metal. It is used in cell phones, telephones, computers, electric lights, everywhere. The more information age we become, the more we use silver. And what Michael is saying is that stockpile is at all-time lows, and they're not discovering much more. Poland has about 25% of the world's silver, so you know, you can buy real estate silver in Poland. You know, but anyway, so when people say,
Mexico too.
Yeah, where am I investing? I say, I'm investing in the world. I say, what do you mean by that? It says, I'm investing in a metal that is consumed throughout the world. So I haven't, and I buy a little gold, but I've been buying silver. Kim and I have been buying silver since it was about $4 an ounce. And we stockpile it, we buy ETFs, we buy anything we can in that stuff. And then, you know, it was, what, $7? Then all of a sudden now it's 15, and we're just watching it. It is not crystal ball. You know, it is not about, you know, the stuff on television. It is pure supply, demand, economics, fundamentals. As I said, there's 2 billion people wanting the Western lifestyle. 2 billion people wanting cell phones, computers, electricity, lights, all of this stuff. So I look at it as $15 an ounce. Oh, I think I'll wait. Well, I remember when it was $3 and $3.50, then $3.70, then $4, and then I said,
yep,
the bottom had been hit. The thing is trending up, and it just keeps going. Okay?
I bought at $4, and I got into the business of selling gold and silver just because I knew that the cycle had changed.
I just want to say too, I think it was interesting. We were in Poland. And Robert's saying, people are saying, well, we're in Poland now, and real estate is really high, and Robert's been talking about silver, and Poland silver supply is like 20 to 25% of the world's silver is in Poland, and they're like, yeah, but what should we invest in? They're like, silver. Yeah, but what? I don't. How? What? You know, what, silver? It's like it's right in front of them. A lot of times it's just right in front of them, but they just couldn't see it.
That's one of the things, too. You can buy it and you can take it home. It can't go bankrupt on you. You can't have a labor dispute or Enron accounting. It's just this super simple thing. You buy it now. You sit on it for 5 years. I don't know how long it's going to take, 2 years, 5 years, 10 years. We could be going into a currency crisis right now. There was a trend line for gold where it was going up very smoothly and the price hit this trend line. It changed a little bit in 2005. I was hoping that we would drop back to the 750 area or so by February and touch this trend line. If we don't, we've established a new trend line that's extremely steep, which would give us maybe $1,500 to $2,500 gold by the end of this year. And that says that we're beginning a currency crisis. Precious metals are the only investment class where their bull market can go from stage 1 to stage 3, and it's called a currency crisis.